Okay, now this is one of the most exciting videos that I feel like I've made in a long time because it's not something you're going to hear anywhere else. And I think it's the most logical approach to next year. And I mean, this video could precede large gains, meaning that this video could give you a heads up of what's actually going to happen, which could make you a lot of money. Now, if you do not like to make a lot of money, click off this video right now. It's not for you, my friend. If you want average returns, if you want a Joe Schmo life, get off the video. You're gonna waste your time. Now, this video is really going to challenge the approach that a lot of investors have to this market right now. And I understand it's not going to be something that makes sense to some of you guys, but I highly recommend you at least try to understand how next year is going to play out. I will tell you though, right from the start, the wild card to whether this will be correct or not comes down to one factor, a singular factor. From what we can tell right now, obviously there could be Black Swan events, there could be World War III or something dramatic that happens. The one wild card is, do we have a recession or not? If we have a recession, none of this will be accurate. If we don't have a recession, all of this will be accurate. In my opinion, this is not financial advice. Structure your portfolio how you want. Okay, contact a financial advisor. So I want to go ahead and just jump right into it. This is the biggest secret by far for all of 2025. And I wrote this post on X. Okay. It says, this is the biggest secret for 2025. Under Trump, we will see inflation come down more than expected via Doge, Department of Government Efficiency, and really just rents coming down. I write next, it has already started. It takes a long time to get rent inflation down, but current market rents show this as proof. Take a look at Redfin's, rent tracker. Get this, in August of 2022, national rent peaked out. Okay, well, for all bedroom sizes, right? For 1, 2, 3 bedrooms, just the average peaked out at $1,700. Today, it's down to $1,619. This is not what you would expect if you looked at the last CPI report and the shelter category. This is because of owners' equivalent rents. Now, I don't know about you guys, but at least where I live in Michigan, I've been looking for a new home, right? Really for transportation reasons. I have to drive far to get to places I want to go to, where I want to put my daughter in school that's heading into school next year is not where I currently live. There's nothing wrong with where I live, but she knows other kids in different school districts, and I want to move there, right? Well, I've been looking for homes, and the homes that I see on the markets are just sitting there. They're really not moving. And when your CPI report is calculated in owner's equivalent rents, and people realize, oh crap, I can't even sell my home because the mortgage costs are so expensive, I probably won't be able to rent my home much easier. Then that's where you start to get the psychology switch that says, okay, maybe rents have fallen. And I think we're pretty much there. Okay, I think 2025 is going to be the year of rent inflation coming down, actually going what could be negative, which is a crazy kind of thought process to have, right? But asking rent month over month was down 0.6%. Median asking rent year over year was up only 0.2%. That's wild. To take a look at the last CPI report that we had year over year. Look at shelter here in dark blue. It's still, by far, the largest category of inflation. Food inflation's pretty minimal. Shelter's the largest. Core services excluding shelter is here in dark purple. I think this will come down a little bit, but probably is going to remain a little on the high side. Energy is negative, and core goods is also negative. So all you really need to see here to get to 2% is shelter that comes down a bit, right? If you get 25% reduction in core services, excluding shelter, and you get a 25% reduction in shelter, you're going to be right at about 2% inflation, which I see as pretty probable. Again, because back to what I said here, inflation really comes down to expectations. And in the Michigan Consumer Sentiment Survey that we got yesterday, 1 year inflation expectations actually fell from 2.7% down to 2.6%. And there's a lot of people that I've talked to over the last 12 months that literally voted for Trump because prices were cheaper in 2016 through 2020. There was this perceived notion that there would be less inflation under Trump. This is something that I noticed that maybe you guys did not notice, but that was like the number one reason people said they were voting for Trump. And I think that psychology will work its way into the actual inflation numbers that we see. Now, if you don't take my word for it, Redfin's CEO, Glenn Kelman, just said on CNBC yesterday, quote, rents are likely to come down in 2025. So I'm not the only one that thinks this. Now, on to the next segment, because obviously inflation coming down is going to be great because, what if we start to undershoot the Fed's target? Crazy thought, I know. But what if we start to undershoot the Fed's target? They're going to be cutting rates more because of lower inflation. Imagine how positive that would be for markets. And at this point, it's all based on expectations. Wall Street thinks we're going to have higher inflation. I don't think that's the case. That is a big potential positive catalyst for 2025. Now, again, moving on. Tariffs. This is another big issue. But let me give you one of the biggest secrets of 2025. I write here, tariffs will only be enacted to the point of which they don't impact the economy. When the SPY starts throwing a fit, that's a no-go for the Trump regime. We know this is true really for a couple different reasons. Number one, we've seen this play out before. From October 3rd, 2018 through Christmas Eve, December 24th, 2018, the S&P fell 20% because of some of Trump's tariff, threats, right? Presumed US-China trade war. Markets fell 20%, and they quickly stopped all of the tariff nonsense. Okay, Trump already knows you can only go so far with tariffs. You can only, have a certain economic impact, or the markets will revolt and you will not be able to do anything, which is essentially what happened in 2018. There was a lot of big threats of tariffs, and then we kind of settled with, tariffs on certain areas of the Chinese economy, in which those tariffs are still in effect today. So it's as simple as that. When the markets start to revolt against the tariff policies that are being thrown out, when the markets start to actually react negatively to tariff policies, they will not be enacted. They will be canceled. And that'll be a buying opportunity, okay? Because Trump doesn't want to come in here and destroy the economy or destroy the stock market. He's really one of the only presidents ever that measures his success by what the stock market is doing. Imagine you're the guy that comes in as markets are at all-time highs and crash the markets. You're not going to be very liked anymore, okay? Even from the perspective of the average 401ks. That's not his goal. And if you think it is his goal, then you are in the wrong market. You should go short everything. And trust me, you will lose all of your money if you do that. I'm not a financial advisor. I'm not a financial planner. Do not do anything that I say, especially not that. But overall, it's just a bad idea. So, to the extent Wall Street is fearful about higher inflation and tariffs, it's without a doubt the wrong view. This is a positive upside surprise coming in 2025, especially for small, mid caps, and cyclicals. See, for a while now, I've tried to imagine where the upside scenario could come from in 2025. And I was struggling with this for a while until Trump won the presidency. Until we started to see over the last couple of weeks the negative verbiage from Wall Street about tariffs and about inflation that could be higher, in which I've known the whole time, but it's coming more obvious that this is a big positive catalyst. When inflation comes down more than expected, when tariffs are not as extreme as Trump is forecasting. Right now, Trump's saying a 60% blanket tariff on China. I'll tell you right now, that's not going to happen because the markets would crash. We would go into a recession. It's not going to happen. So there's a positive surprise on the back end of that when we get smaller tariffs or more selective tariffs. Now, there's also the flip side of that coin. Tariffs could lead to more onshoring, more domestic investment, which could also be good for economic activity. Now, I go on to say here, this is bad news for big tech, as they will no longer be able to be the only party in town and the quote-unquote defensive trade. Big tech has been well liked because of, higher inflation, presumably higher odds of a recession as the Fed was raising rates. If inflation comes down more than expected and tariffs are not as extreme as we're expecting, which is my base case assumption, big tech's no longer going to be the area that you want to be in. It's going to be small caps, mid caps, cyclical companies that could benefit from lower interest rates and higher economic growth, as well as onshoring and more domestic investment. I also say here, small cap and mid cap typically have traded at a premium valuation to large cap tech. That is before 2023. So 2023 kind of changed everything with the whole crowding into big tech. Big tech has traded at higher valuations than small caps and mid caps since at least 2023. Why? It's actually quite logical. Small and mid caps should offer more growth than multi-trillion-dollar businesses. Under this framework, I'm incredibly bullish on these areas. You could actually experience something pretty remarkable next year. Imagine if big tech, trading at 28 times 2025 PE, came down to, let's say, 18 times PE, where the average S&P stock is at, but smalls and mid caps actually got to a 25 times 2026 PE. This would be a stock picker's dream. And essentially what this would do, since big tech holds the large market cap weighting in the S&P and the NASDAQ, you could actually see the S&P and the NASDAQ stay pretty flat, even if big tech falls, and the rest of the markets go up like 35%. Right? You could see a ferocious rally under the surface of this market if big tech were to actually come down, as their growth rates are now slowing down, right? I should have probably added that. You could see these things kind of net, where if you're a stock picker and you're investing in small caps, mid caps, cyclicals, beaten down, unloved companies today, they could be the massive outperformers next year. Whereas big tech, the crowded trade today, may not be. So I think there's a risk to the index at this point. I don't like the S&P or the NASDAQ on an index level. I think risk to reward is poor here. Whereas if you're a stock picker, maybe a stock like Tesla, maybe small caps, mid caps, cyclicals, right? I'm very confident you're going to outperform the index by maybe 2 or 3 to 1 next year. Now, again, the only wild card to this is a recession. If we have a recession, then the opposite of this video is true. Small caps and cyclicals and mid caps are going to underperform relative to big tech. They're all going to fall, but if big tech could fall 25%. Small caps could fall like 50% if we go into a recession, maybe more than that. At this point, it is far too early to tell whether we're going to have a recession or not. I think the odds have gotten lower of a recession in recent months, but it's still a looming possibility that we just don't have clarity on yet. And I do think there will be at least one more growth scare in the relative near-term future. I believe in Q1 or Q2 of 2025, by midpoint of next year, there will be a 10+% correction. Because again, markets are all based on expectations. Expectations are that we're going to have higher inflation, tariffs that are going to be bad for the economy. One, I think those expectations, again, are wrong. You're going to have less extreme tariffs, lower than expected inflation. That's where the whole thesis of small, mid-cap cyclicals will outperform. But as far as the headline economy, expectations are really high. Okay. Now, I think we may actually come in with those expectations, but at some point, that will get shaken. At some point, the data will start to come in bad, and Wall Street will say, oh crap, maybe the economy is not going to be as good as we think. And that will cause markets to sell down. Now, I also think at the same time, literally at the same time, you will also get some of these tariff announcements. Okay, markets are not going to like some of the scary tariff announcements that we hear. Ultimately, they will not be enacted. That's why it'll be a buying opportunity. But once you get those tariffs that come out, perhaps mix that with some weakening economic data, and that's where you're setting up for a 10 to 20-ish% correction. I think it'll be short-term in nature, but that will be a huge buying opportunity. And I'm setting up for that today. How you set up for that is raising cash. It's getting ready to buy the dip. Now, I should also say that with my theory of we're going to see lower inflation expectations, the tariffs that we get from Trump, yes, there will be some, they're not going to be nearly as dramatic as we expect, will likely cause 10-year Treasury yields that have been trading higher recently on, higher than expected inflation expectations long term will actually come down. Okay, they could come down to as low as about 3% for next year. Now, that would be a drop of about 1.41%. Okay, this would help really support the narrative, the outlook that I have of small caps and mid caps and cyclicals outperforming, whereas you could see an actual drag or a net loss on the year from large cap tech. Okay, just purely because large cap tech should not be trading at the valuations they are with as little growth as they have. They're actually some of the most expensive stocks in the markets. When you look at price to sales, when you look at, PEG ratios, they're not attractive at current levels or current prices at all. Now, with that said, let me know what you guys think about what 2025 has in store for us. But Goldman Sachs says here that stocks tend to rally after a momentarily Thanksgiving pullback into Inauguration Day. So markets actually rally after a brief little drawdown after Thanksgiving into Inauguration on January 20th. Now, there's been a lot of speculation about whether you should, buy a year-end rally and sell the inauguration. That's probably when we can expect to see some kind of correction around inauguration, around February, maybe into March, and that would be your buying opportunity. But even someone like a Tom Lee, as I explained yesterday, expects the markets could hit on the SPY 6,100 by this upcoming Friday. Keep in mind, Thursday markets are closed for trading, and Friday the markets close at like 1 p.m., I believe it is. So you really have Monday, Tuesday, Wednesday, and a half day on Friday. You have like 3.5 days of trading this week where you could see a pretty explosive rally. I'll also mention the S&P was up 1/3% on Friday in regular trading and up another 0.16% in after hours. So it looks like that momentum is continuing. And what you're likely going to see from now into year end is chasing. If you're a fund manager and you're up 15, 16% on the year, but the S&P's up over 20%, that's not good. That is no bueno, because your clients are going to say, I should have just been in the S&P this whole time. Okay, so that's why you're likely to see a chase into year end. It's probably going to be in those small cap, mid cap areas. It's probably not going to be in big tech. I would be surprised if it was in big tech. But that chase could really help propel you higher. And it's also being reported that Donald Trump has elected Scott Bassett to be the next Secretary of Treasury. Scott Bassett says the crypto economy is here to stay. And the CEO of Ripple says it's a perfect pick. So this could be bullish for Bitcoin, even though we're not really seeing Bitcoin moving higher. You're actually seeing Bitcoin moving lower over this weekend, down to about 98,000 versus the almost 100,000 that we hit overnight. You know, this is good news for crypto land, but you're probably due for a correction anyways in Bitcoin, and that's something to watch for. We also have some economic data next week, mainly on Monday and Tuesday. It's some of your like Chicago Fed National Activity Index, Dallas Fed Manufacturing Index. That's on Monday. On Tuesday, new home sales month over month, CB Consumer Confidence, Richmond Fed Index, Manufacturing Index, and Services Revenue Index, Dallas Fed Services Index, some more regional data. But on Wednesdays, a huge day for data, like massive day for data. Core PCE month over month expected is 0.3%. If that comes in lower, that's good. If it comes in line with expectations, that's probably good. If it comes in higher than expected, that's bad. Simple as that. Durable goods orders month over month expected is 0.1%. Last month was negative 0.7%. GDP growth rate quarter over quarter, second estimate for Q3 last we heard was 3%. We're expecting this could fall to 2.8%. Personal income month over month expected is 0.3%. I don't think that's really, you know, a catalyst. Personal spending month over month, though, is going to be huge. Last month was 0.5%. We are expecting 0.4%. Also, initial jobless claims will be coming out Thursday if all of that other data was not enough, and continuing jobless claims. You also get Chicago PMI, pending home sales month over month and year over year, as well as some oil data. Thursday, obviously, markets are closed, so nothing on Thursday. And on Friday, you don't have anything else either, and that's a half day. So as long as the data comes out Wednesday and it's good, then you're probably going to have a really good Wednesday. I imagine Monday and Tuesday are going to be good as well. I think there's a lot of momentum behind this market, especially like a Russell, right? Like an IWM that has continued to outperform over the past couple of days. Like, you could be pushing at least all-time highs by Friday of next week. One situation is going to be different. My situation, I'm able to invest in, longer duration companies, more speculative companies. Depending on what age you are, your income, all of that, your situation is going to vary. So contact a financial advisor if you have any concerns. If you are curious about their opinions or whatnot, want the best advice for your financial situation, then do that, because I'm not a financial advisor. I do not give financial advice. I just share my opinions and what I'm doing to document this for my future self. So thank you guys for watching. Enjoy the rest of your day and weekend. I will see you in the next one.